A major crypto warning. Is the bull run over once again, right? We're calling the end of the bull run for the 20th time, or at least that's what crypto Twitter is doing, because we have had a bloodbath not even the crypto markets, the traditional markets. If you have a look at this over here, some massive drawdown, losing almost $1 trillion worth of market cap across the overall traditional markets. And that, of course, did affect crypto. So in today's show, we're going to have a look at, is it all over? Are we still on track? What can you expect in the days and weeks to come? And the trap that the masses keep falling for time and time again. Make sure you smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get straight into it. And my question to you is it bend or send? Which one are you going to be doing leading into November? Is it Moonvember or Rectvember? Please let me know in the comments. Choose your pick over there, Moonvember or Rectvember. Start spamming the chat over there. I'd love to know what your guys' thoughts are for the month of November. We're going to have a look at some of the statistics, some of the data, and then we will make some conclusions as to where we think price is most likely to go next. Because if you look at the banter bubbles over here, it has definitely been nothing short of a short-term bloodbath. The medium timeframes still remain intact. The high timeframes also still remain intact, which means medium to long-term bullish, short-term, of course, pullbacks are part of the game, right? That is a full possibility. And we actually spoke about the most bullish case scenario being for Bitcoin to form a trading range, between about that 68, 69,000 and about $74,000 level. More specifically, if you can keep closing candles above $69,000, that becomes still a bullish environment, showing bullish absorption and the bulls defending the key levels. But there will be a little bit of repricing this week, specifically, now leading into today and next week. And the reason for that is because we have the US unemployment rate data, which is going to be coming out. This is going to be a major driver in terms of what the Fed is going to do in their next decision-making process. And we're all waiting for the Fed to flip into quantitative easing and into loose monetary policy. And this is going to heavily affect whether they're going to do that or not. So we need to keep an eye on this. And it just so happens to line up within a couple of days of the US election, which you also know is a major high-impact economic event that affects not only the crypto markets, but worldwide markets, even in the traditional sense. So this is something we need to look at. This is something we have to focus on. And if you take a look at the chart over here, you can see that any time that the unemployment rate spikes towards the upside, you typically have major market crashes. And as you can see, the employment rate did tick up over here for quite some time. The stock market was coming down, and then the employment rate started to come down. Now we want to see a continued decline in that trend in order for the markets to remain healthy. And that will increase the probability that the Fed will cut the interest rates once again and then pivot into loose monetary policy, which is very conducive and good for the crypto markets, right? As well as all other risk on market. So here's your stock market. We're having a look at it on the daily time frame. And as this currently stands, this is still a bullish chart with higher highs and higher lows. And therefore, it's an uptrend. Remember that the trend is your friend until the end of that trend, right? Has that trend ended? Absolutely not. You can see we got the yellow line over here, which denotes the previous resistance levels. So that was a local top over there. Price came in there as resistance again, putting in the next high low. And then you created a little bit of a gap, right? A small, tiny little futures gap over there. And this is going to be interim support. So if you see price coming down a little bit further over the course of today and next week, that's going to be one support level. And then the next support level is, of course, if you use your Fibonacci tool and you anchor the range levels from the bottom to the top over here, this is going to be your mid-range point, which lines up very close to where your prior tops were, right? So you're looking for support around this $5,500 level, and that is going to be for the S&P 500. If you do find that support, it should be long and strong, and you should see continuation. Remember, if you go on the higher time frames, like the weekly, this is what the weekly chart looks like. Still bullish, right? Higher highs, higher lows. And if you look at the monthly chart, which gives you even more history, we've seen what's happened previously leading into the election phases. We tend to see a continued run and march up in price. And in the worst case scenario, we spoke about if there was a major shock or some sort of black swan event that occurs around that election phase, you know you have very, very, very major support coming in under $5,000 on the S&P 500. So those are some of the levels, but play it level to level. The most significant, of course, is going to be daily, right? You have to first lose the daily levels before you can even start to focus on those high time frame monthly supports. And therefore, your daily level that's closest to current price is going to be that $5,500 level. Also, we have to have a look over here at what's occurred with the ETF inflows, right? You know, typically, well, the people that are buying these ETFs are retail market participants for the most part, and consequently, they're subject to the same emotional turmoil that you and I are subject to when it comes to trading on a crypto exchange. And if you have a look at this over here, and you look at 𝗕𝗓𝗓𝗧, he says the last week has been characterized by monster inflows, which you can see from the prior times, like February the 29th, and then we had June the 8th over there. When you had those prior inflows, it did lead to a little bit of drawdown. So these are levels that we need to focus on. I'll give you the exact price targets on Bitcoin per se, but he says, will this time be different? In the presence of a big event, along with how much it has been front run, I tend to believe that this time will not be different. So he's leaning towards a pullback. Some analysts will be looking towards that. And you can see the majority of the market over here are looking for shorts, right? You can see over here the 24-hour long to short ratio sitting at 52%. So definitely heavily skewed on the short side as it currently stands. And yesterday, the shorts definitely had their day because the longs got squeezed out, taking $248 million worth of liquidity. Anytime we see between that two, in terms of the 24-hour rec chart, anytime we see between 250 and about 400 million, these are significant periods in time that tend to mark major lows or major highs, depending on whether it's the longs or the shorts that get liquidated. And then you find some sort of a bottom or top, and then price moves in the intended direction. You can see in terms of the majority of the market over here and the long to short ratio being short, well, the liquidity is definitely spiking strong towards the upside. You now have sitting at that $73,000 mark, about $35 million worth of stop losses, right? So these are short traders who have placed their stop losses above the local highs. If price were to come back into that zone, you know, that's liquidity there that's ripe for the taking. We also have to look at how October closed. So we ended off with 10.76% returns. And remember, on average, it was 21.89% for the month of October, with the strongest Octobers always being in that election year and the post-halving phase, right? So this is definitely a weak October. And if you look at September and the growth into October, 7 and then 10%, you do get a bit of diminishing returns as the asset grows. But your expectation should be that you're probably going to have follow through into November. November is, remember, typically one of the strongest months. So we have to look at some other quantitative data, which we can thank you know, friend of the channel, Eric Crown, for, because he always pulls out the quant data, and he says something weird about November the 2nd or 3rd during election years for BTC November lows. Now, the most important thing is that you have to look at what the weekly trend is doing in that time frame, right? Remember, the trend is your friend till the end, and it's one of the most important things that you can do as a trader or an investor is do not counter that trend. You will be significantly more profitable if you trade in the direction of the trend and you don't look to counter that trend the whole time, right? And what did we see? Well, in 2012, on the date, which was the 2nd, right? So not today, but coming up tomorrow, price was creating a low. Was it the low for the end of the year? Well, that's what he said, right? Yes, it was. Was the weekly trend up? The answer is yes. So that is a election year. In the post-halving was 2012. The answer is that was a major low that was created between the 2nd and the 3rd of November. In 2016, on the 3rd of November, you also put in a major bottom. Was it the low for the end of the year? The answer is yes. Was the weekly trend up? The answer is yes. Was it a pre-election year? And as well as that a post-halving year? And the answer is also yes. And therefore, you saw continuation onwards and upwards, meaning that that presented an absolutely phenomenal buying opportunity. 2020, let's rinse and repeat this exact same thesis. The 2nd of November, you put in a major low. It was the low for the end of the year. The weekly trend was also up, and therefore that presented an incredible opportunity. So you make your own decision. I know what I'm doing. If you look at the historical data, we can use this as evidence to determine what's the most probable outcome, what we should see next. And, you know, betting on black swan events and things like that, it's not going to have a very high hit rate, right? How many black swan events do you get in a decade? Maybe one, maybe 2. Are you going to be betting on that one happening now? I mean, it's up to you, right? Some people actually are. Some people are. And if you look at the weekly scale or the monthly scale over here, this is still a bullish chart, right? So price ended up closing. Let's quickly zoom in and have a look over there. We're slightly lower, but if you look at the closing price over here, it was $70,197. And what I told you in the weeks leading up to this monthly close is if we see anything closing above $69,000 for the monthly candle, consider that bullish, even if you do put in a bit of a wick and you come down, which is now what we've seen. But the fact is that you still ended up closing this candle above $70,000 and more notably above $69,000. And therefore, I said in November, there could be a little bit of surprise price action, right? A bit of chop. Maybe you come down, but at the end of the month, the probability is going to be much higher that you're going to lead into the big breakout, right? That's going to be the month where you probably see the real breakout for Bitcoin and you lead into that $80,000 territory. Now, we can't count our chickens before they hatch. We do, of course, need to focus on the day-to-day and week-to-week timeframes, which means it's really important that Bitcoin still closes above this $70,000 mark, right? Otherwise, we're going to end up having this massive wick over here. That's going to create a lot of indecision, a lot of chop, and then you may be in for a deeper pullback. But as per my trading system, at least, I'm pretty comfortable with establishing longs on Bitcoin so long as price keeps closing above $60,000 in the coming days and weeks. Ultimately, that is my thesis, right? That's my basis. If we start to get below this 21 exponential moving average with multiple candle closes, this is where we start to rethink things and we may be going for a deeper pullback. But again, I understand, I know that we have this election phase coming up. I know this is one of the most important elections that the US has ever seen. So I understand that there can be a lot of chop into this type of environment and the emotions are running very, very high. But remember this, you need to go in line with the trend. And not only that, but you also have to consider the length of these consolidative periods, which was an 8-month range, right? When you start to show signs of breaking out of an 8-month range, which we have because you have 1, 2, and 3 candles outside of that range, breaking the downsloping, breaking above the strong horizontals over here, that is a telltale sign of what's most likely to come next, right? So, don't bail out of your positions too soon is at least my thesis. And there are ways that you can take on less risk but still get exposure to the market, which we'll talk about in just a moment. At the end of the day, the volatility is your friend, right? The volatility continues to expand towards the upside, which makes it most probable that you're going to continue to see this pattern of higher prices from September to October to November. You should continue with that trend. This is the beginning of a high time frame trend, which is moving towards the upside, right? And then you have Ethereum over here with the volatility still recontracting. Remember, we have measured moves for both of these targets, and Bitcoin is looking to go to about 106,000 with Ethereum up to about $5,000. While the rest of the market is fearful and scared, these are oftentimes your best opportunities to gain your entries into the market. Now, if you're super fearful, if you've joined into the market late, there are ways in which you can get exposure in an incredibly low risk way, right? One of the ways that you can do that is if you go through to the YouTube video and you click on the description, which is listed below over here, and you go through, scroll down to where it says 𝗪𝗧𝗪𝗧, you can sign up to 𝗪𝗧𝗪𝗧 over here, which is an options trading platform. There it is. You can see we have the closest dated options, which are coming up now on the 8th of November, 2024. It's got the little flag there because this is the election period options. Now you'll see that the asking price for these options are quite pricey, right? Why? Well, because in a couple of days' time, the higher the volatility gets and the closer you are to the expiration date when purchasing these options, the more expensive it becomes. Remember, the options give you the right, but not the obligation to buy the underlying asset, which means that you can take out an option over here. You can have a look at an option over here. And if price is above the strike price, plus the premium that you paid to purchase the option, you'll essentially be banking the profits. Now, because these ones are very, very expensive, I would never recommend that any of you buy it on the open market. I would prefer that you look out to further dated options, things that are maybe coming up in March 2025. That's going to be a lot cheaper for both Bitcoin and ETH. But the good news is that 𝗪𝗪𝗪𝗧 are giving you the option, at least, if you join and sign up now to their platform, you'll actually get free US election options, which means, you don't have to pay these asking prices over here. You'd only be covering the strike price, which means for the first 100 people, it's entirely free. If you use the link in the description below, sign up over there. Remember, they're doing the Winter Trading Championship competition right now, where you can participate as well by joining the Banter Whale team. All the links are below, right? If you do want to get exposure to the market, in a lower risk way, please do that. If you want more information on this, I remember that because some people don't understand options and you may have never heard of options. Remember, if you scroll through in the description below and you go to the Whale Crypto Trades and you click on that over there, it will take you through to this page. Scroll through. There is an article that's linked in here which teaches you the strategy that I'm looking for options, which I'm going to be taking out, or I have been taking out already on Ethereum. So if you want more of that information, it's all linked below. Now, let's continue. Let's have a look over here at the total cryptocurrency market cap, because ultimately this is indicative of whether everything is going up, right? Is the rising tide lifting all ships? This little pullback over here is still fine, still healthy, right? You're still meeting, I just added this in this morning. You can see a little bit of a parabolic trend line that's starting to form over here, and the volatility will increase. So expect that it's going to be harder and harder to hold on the later and later that you join, because you do get these absolutely wild swings, right? I actually saw even on one of the meme coins on Bitcoin, which is the ticker 𝗕𝗟𝗘𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓 immediately it's trading back to where it was previously, right? So this is the environment where you want to start to become careful when it comes to taking leverage, because you can easily get swiped out of your positions, even if it's a low risk position, right? A low leverage position like 2x long. You need to rather shift your mindset towards spot trading. Most of you are going to make much more money if you're trading spot, and you're going to keep most of your money. Whereas if you're on leverage, you're going to get absolutely hammered. So please do be careful of that. But anyways, this is your total cryptocurrency market cap. Remember, you've just broken that trend. So similar to what I just explained when it comes to Bitcoin and the long-term range that it's been in. Look, this is still range bound, even if the market cap were to get to about 2.6 trillion. And this is similar, right? This has been currently at least downtrending and ranging for 232 days. When you eventually leave this range, it's going to be pretty explosive. Now, the tough part is that the psychology has conditioned you into thinking that, every breakout that you think occurs just ends up being a trap and price continues to get smacked down, right? Then when price actually breaks out, you've been conditioned with that type of psychology where you don't want to believe that it's actually breaking out, where it's literally evident and showing you that that's exactly what it's doing, right? So continue to monitor the trend. You guys know the saying, right? Keep it simple, stupid. Keep it simple. You got lows and higher lows and higher highs, right? Higher lows and higher highs. The trend is your friend. So keep it really simple. Monitor that trend. Things can start to change if we take out this higher low over here. Then we'll look to this as the next major area of support. And then, of course, if the total cryptocurrency market cap breaks and holds below 2 trillion, something different is happening. And maybe we really are going in for a much deeper correction. So that's what I'm watching. I'm keeping it very, very simple. And I'm looking to the prior cycles of which nothing has changed, right? We're on the purple line over here, which is cycle number 5. And you can see it's really exactly as it has been before, right? There it is. You can see exactly as it has been before. The purple line tracking along just like it did in all the previous cycles. We're now sitting at how many days in? 717 days into the crypto cycle. And usually you push up into about 722 days. And then, maybe early next year, you lead into one more final flush and a bit of a pullback. And as you progress into day 730 and onwards, that's where things really start to heat up and become mega parabolic. So it's all lining up. Everything is pretty much following to perfection. That is for Bitcoin. If we look at the ETH chart over here and we compare to the price cycles, well, ETH is lagging pretty significantly in this cycle, right? There it is flashing on the bottom of the screen. The price cycles, ETH moved a lot quicker before. And let's actually look at XRP just for the sake of it. Why not, right? Why not? So XRP is in green, right? XRP has been absolutely killed. Look at this. This is your newest stable coin, right? Your newest stable coin added to the list of the USDTs and USDC it tends to just move sideways, right? So anyway, let's continue. If we look at Bitcoin over here, this is ultimately the high volume profile that we've been focused on. In order to meet the criteria of the Wyckoff Accumulation schematic, we needed to see price break above all of those high volume areas where the point of control is now running through this part of the screen, which is 67,122. Again, 67,122. And ultimately, we just want to see bulls defend and hold price action up above this level. We said look for a little bit of a range to form. If you see something like that, that still classifies as the sign of strength, which is the phase in the Wyckoff Accumulation schematic where you transition from phase C into phase D. This would essentially be phase D. Following phase D comes the final phase, which is phase E. And phase E is the extreme markup phase where everything radically pushes onwards and upwards, right? So there it is. This is your Bitcoin price right now, dropping back down to 69,156. Now, we need to wait for the day to be over. We also need to wait for the week to be over. But as long as you're seeing price action closing back above the previous week's high and the previous quarter's high, there is opportunity there to confirm the SOS phase, right? If you do end up losing that, it might be further to the right that you break out and you eventually get the SOS phase. At the end of the day, consider it an opportunity, right? Don't wish for price to rally straight to new all-time highs too soon. The longer that you chop around and form a strong base for, the bigger and stronger the next move will be, right? And the higher the probability is that the following phase of the bull market will be sustained and have continuation. You don't want to move up too fast. So this would be a really healthy sign if you saw price consolidate between the $69,000 and $74,000 region, creating that SOS phase before leading into a breakout. Now, part of the reason that we have to be reserved that something like that may happen is because with a very high hit rate, we have the new bear moon, right? You guys have seen it in action over and over again. I've shown it to you every single time it's relevant. Bull moon price goes up, bear moon price comes down, bull moon price goes up, bear moon price comes down, right? But in an uptrend, when you receive that bear moon, treat it as a consolidation, right? The most probable outcome is a consolidation as opposed to treating it like every time you see a bear moon, you're just going to zero and it's full on trend reversal. That's unlikely to be the case. The most likely outcome when you see those moons is that you're going to print some sort of a trading range over there. And then in the next 2 weeks, we'll print another bull moon, and that should lead to the next upward move. So very fitting, right? Very fitting, given that it's all been Halloween and everything. I know you guys like things like this. The only reason it works is because your body's made up of water and, the moon affects water. Simple as that, right? Bitcoin dominance continues to pump towards the upside over here, really pushing it. We spoke about the possibility that it could overshoot this. It already broke this upsloping trend line over here, which is meeting the criteria, at least, of a rising wedge formation, which is typically a bearish pattern. You're now coming into resistance, but the trend is still very, very strong, right? So you're looking for some sort of weakness in this very, very soon. This is a weekly time frame chart. So, I would say in the worst case scenario, Bitcoin dominance, worst case for altcoins, best case for Bitcoin bulls, you should see Bitcoin dominance rallying up, anywhere between now and the end of December. You're going to look for major weakness and some sort of a stop and reversal, right? So keep an eye out on that. That is for the Bitcoin dominance chart over here. Remember, breakdown in Bitcoin dominance is going to make it easy for altcoins to rally. So DXY, we're still waiting for the pullback. Also high time frame chart on a weekly over here. Give it a couple of weeks, but you are in the zone between the 0.65 and the 786 over there, where you might see some reversal. Okay, ETH BTC, obviously if Bitcoin dominance is going up, ETH BTC will continue to come down. But again, you're right in that timing sector between now and the end of December, where you're looking for a major reversal or bottoming process over there. Here's your ETH USD chart with the little fractal that we pulled from the prior October, November, December into March period. And as you can currently see, well, the weekly chart definitely doesn't look good for ETH over here. If it closes like that, if it has a little bit of a rally into the end of the week close and somehow closes neutral to green, the hope still remains alive. Otherwise, in a worst case scenario, you know, there is a possibility that if ETH gets pummeled for the rest of the year, or the ETH BTC chart, you'd be looking at something like that with a move back down to about $2,000. So that's your bear case, right? That's your bear case. Your bull case is living on hopes and dreams of a fractal that will continue to rally up. Now, guys, I'm not someone that, I don't live on the hopes and dreams of fractals. This was simply just to showcase the, the relationship between what's occurred with Ethereum in the previous quarters. In Q1 is where we tend to see rallies, and the fractal just essentially depicts that. This is never something that I would trade off, right? I would never put in a fractal and then now you go gig along on ETH because the fractal says so. Those fractals are not reliable, right? We're looking at USDT, obviously getting a little bit of a move up over here, but as long as putting in lower lows and lower highs, which currently you do have a bit of a swing low in play here, you've broken this major trend line over here. So as long as you keep holding below that, there is still the opportunity for the breakdown of USDT. And then you're looking for the major support on USDT to be found between about this 4.25. And if it doesn't bounce from that level, and for some reason it goes through that level, well, then your next major level is going to be 3.4% over there for the USDT dominance. Remember, if dominance goes down, it means that money is leaving Tether and going into probably other altcoins, right? Other altcoins or Bitcoin or ETH. It's probably not going into USDC or anything, but we can also track the other stable coins. Stablecoin dominance going down is because it's moving into riskier assets with volatility and the opportunity, of course, to make money. So we're keeping an eye on that. Now, as we wait for, ETH to essentially create some sort of a major bottom, the ETH BTC chart like over here, sometimes it's worth looking to the higher beta plays, right? And one of the things that I thought about this morning, what I was reminded of, is the Pudgy Penguins, right? Because if you look at this, it just came out. Pudgy Penguins has always been one of the NFTs that I'm most interested in. There's really only 2 NFTs that I'm interested in. I haven't pulled the trigger on the Pudgy Penguins yet, but I did pull the trigger on the Trump NFT collection cards leading into the election phase. And I do believe that's going to be a pretty solid bet, right? So I already purchased those. I'm just waiting to see what happens in the election phase and then possibly looking for a sale of those NFTs. But the other one that I think is probably the most successful NFT that we've seen, since the punks is, of course, the Pudgy Penguins. And they've just announced the Pudgy Party, right? So you got Mythical Games and Pudgy Penguins bringing you a cool new mobile game. These guys are involved in real world things beyond just crypto. They've had the Pudgy Penguins in Walmart. You can actually buy them there, the actual little teddy toys over there, which is pretty cool. And I think this has been one of the most successful NFTs. If you look at this, it's currently 8.68 ETH. Now, the reason I haven't pulled the trigger yet is because I've been waiting for this, right? I've been waiting for some sort of a major bottoming process on the ETH BTC chart before moving into things like that. Because only when ETH BTC is going up and ETH is breaking out will you see people move into the high risk assets like these NFTs, right? So currently 8.68 ETH. You can get the mini Pudgy Penguins, the small ones, which are a lot cheaper, by the way. But these are the main ones. These are probably the best of the best blue chip NFTs that are out there. So basically joining now with the Mythos chain on Polkadot. Remember that the partnership with them partnering with Mythos, they also have a Myth token, right? So, I mean, you can speculate, maybe there'll be some price movements on the token as well. If you do look at the total supply and the circulating supply, the majority of the coins are in circulation. About 75% of them are in circulation. So maybe a little bit of an opportunity when the market moves into risk on environments. These are the kind of degen things that you hear about that are doing 100, 200% gains every single day. When the market turns, these things absolutely fly. So currently down 88.7%. If there is a little bit of a play over there when the gaming sector picks up, these are some of the degen bets that you can look to. So the Myth token over here, as well as the actual Pudgy Penguins. All right, let's get into some of the other requests over here. If you look at Dogecoin, Dogecoin's obviously had a stellar move over here. Let's quickly mark out some of these fib levels. I just want to double check where we're at in relation. Okay, you're coming into the mid-range right now for Dogecoin. That's going to be 15 cents. Watch as it attempts to find support over there. If it's a little bit of a more aggressive pullback, then of course you need to look to lower levels, which we can look at as the, let's just quickly put it in, the golden pocket over there. Then maybe you're coming into the prior tops over there, and that's going to be 14.6. 14.6 is going to be the next area of interest. So again, just a reminder, look at a bunch of the coins. If you've been choosing the coins that are, inherently strong, they should be looking like this, right? You got the lows, you got a high low, and then you should be looking anywhere around here for your next high low. And if you keep putting in those high lows, then expect continuation of these moves, right? So don't be scared out of all your positions yet. You have Solana, which is coming back to test this region as support now. This is going to be a very important level for Solana to hold. You want to see the next high-low formed here. And to be honest, structurally, when you look at the chart structurally, I'm actually pretty happy that Solana is coming back into this level. And I say that as somebody that is a big-time Solana holder because, for sustained rallies, this 1 wick and straight continuation to try and take out this level was not enough, right? You needed to see a bit more of support that's formed over here, and therefore the move back into this region is probably a good thing. Where does this all start to fall to pieces? Of course, you must have your validation and your invalidation levels. Like, we cannot sugarcoat it. If you start to break below this 157 region and hold under that level, then you're coming all the way back down 140 and possibly even 120. And if you lose 120, well, we have to question, is this even a bull market anymore? Things could have changed at that point. So what else? What else have we got over there, guys? Drop in the comment section. I am having a look there. What we'll do as well as tomorrow morning, I am going to be doing a show. We can also reserve a lot of the coins and the requests for tomorrow's show. So make sure that you subscribe to the channel if you're not already subscribed. Sign up. And then also one more thing before we go into the other requests, I do want to remind you, if you click over here on Blofin, well, time's running out, right? Because they're also running the Halloween special. I finally turned my screen upside down and I could read what this said. It's TradingView 3 months subscription. You get a 3-month TradingView subscription over there. So if you come through to Blofin and you spin the wheel, you have a chance of winning 2 Bitcoin, an iPhone 16. You got 30,000 Shiba Inu, 3-month TradingView subscription. 2 Tron, cover your transaction fee for something. You got $10 in futures bonus, and then you got 40,000 Pepe, and then you have like a 1 in 8 chance that you get absolutely nothing. So pretty good odds that you're at least going to get something over there. Use the link in the description below for Blofin because this is running out. How long? You got 2 days left, right? 2 days left to participate in this. Remember, once you sign up to Blofin, you can then also come through to the Banter Bubbles chart. You can click over here on Win a Bitcoin, and then you can come and enter here as well, which is why you have a chance of actually winning 3 Bitcoin. The closest guess will win a full Bitcoin. Whoever comes closest as the clock strikes 12, right? Cool. Let's continue. Let's continue over here. All right. What else are we looking at? Deep in on SUI. Let's have a look at SUI over here. How is SUI actually holding up? Maybe we should just quickly run through the layer ones. Let's do that. That's easy. The layer ones, pretty much show the hand of the majority of the market. So Casper obviously getting a bit of a move here, but I wouldn't jump into this too soon. I still think Casper's probably structurally looking like it's going to come down to this region. Maybe you can throw in a bit of a trend line like that, but not really. You see, it's already been broken. So focus on the horizontal 0.097. That's what I'll be looking at over there. Tron, unbelievably still holding up strong, right? That's why those 2 Tron, you never know what those 2 Tron coins are going to be worth in the future. But right now, Tron holding up over there. It's not looking too bad. We just covered Solana, so we'll skip that. You got Cardano coming back into major support over here. You don't want to see it take out that 31-cent region if you're a Cardano holder. You have a Lithium also coming back into key support over here. This one's failed to catch a bid, right? Following the break of the downsloping trend line, it basically just bled all the way out again. back into the major lows. You got Toncoin over here also coming back into key support over here. So observe, right? Observe the reactions out of these zones. Remember, Bitcoin is going to be your ultimate proxy to focus on to see what the rest of the market is doing. Okay, you got AVAX not looking too good in my personal opinion, breaking that line over there. That probably means it's going to come down at least to about 21.74. If it loses that, then you need to look down to about 19 cents. Okay, SUI. Big move up over there. This is where you want to see price hold up at the inefficiency candle. You do have a little bit of a fair value gap that formed over here. So this is the region. There it is. You know, you really want to hold up as support into this yellow box, and then you want to form the next high low. Look for wicks to form around this area, and then for price to very quickly recapture the $1.98 region. You want to see price trading above that $2 region, and then you can look towards high prices. All right, Injective coming back down. If you are looking for the long trade on Injective, you know, anywhere within this region over here is fair game. You still have this wick over here that wasn't filled, a little bit of an inefficiency. Possibly you'll come down as low as about $7.65. But just like with the rest of the coins, you need to be really careful, because the trend has mostly been towards the downside. If you look at the prior trend, right, mostly towards the downside. Now you're attempting to put in high lows. This creates up a buildup of liquidity within this region, right? So you have built up liquidity underneath this yellow line. And that means if you do start to come below this, you could very easily drop like that. So just be careful, have tight stops on any of the trades that you're taking. Polkadot, really not looking good, right? Just deviating that whole level. This one's getting absolutely smashed. This could very easily go to new cycle lows. Be careful of that one. If you look at NEAR, well, this is what I was talking about on Injective, right? You got to be quick to stop out if you're on these trades. You know, the fact that it's breaking this upsloping trend line now opens up the possibility that this is going to trade all the way back down to about $3.47. A0 also still coming down over there, just like the rest of them. Atom, you know, it's been very poor compared to the rest of the layer ones. This one's probably coming down for this low at 360. Aptos was recently one of the stronger ones, but we spoke about the importance of Aptos holding above this range high, right? So let's quickly clean this chart up a little bit over here. Clean that chart up over there. Let's just see, this is going to be all your built up liquidity, right? So between here and here, you got a lot of built up liquidity. Watch as it starts to sweep that. You know, you could again come down to $7.38. I'm long on Aptos, but I got in near the bottom of the range low. So personally, I'm going to continue to hold mine because I do think at the very least, you're going to bounce from 735, even if you do get there. And then I can reevaluate, right? Also coming down back into this region over here, you want to have a hard stop below, well, where the current level is at 34 cents. But we spoke about leaving or reserving the possibility of scaling in as price comes down, right? So you have a general area that you're looking to scale in, which looks like this. Anywhere within this region over here, this is your scale in area. So watch for, again, if Bitcoin does hold up and we actually see, this come to fruition, in terms of Eric Crown's analysis over here on what occurred on the 2nd and the 3rd of November, then you would expect that altcoins will catch a little bit of a bounce with Bitcoin should the end of year lows actually be placed on the 2nd and 3rd of November, which is tomorrow and the next day, right? So leading into Saturday and Sunday weekend, price action can be very challenging. So of course, do be careful of that. But that's it from me, folks. Let's cut off over there. I'll see all of you on the next one. Claim your Blowfin sign up bonus over there as well, and deposit and then spin the wheel, right? You could win 2 Bitcoin and then go through to Banter Bubbles as well and try and win over there the other full Bitcoin. I'll see you all on tomorrow's show. We'll do all your altcoin requests over there. Have an absolutely great day and cheers for now, guys.